Tuesday, July 28th, 4:02 p.m. What's up, everybody? Popping on here. We might get interrupted by another barky break, but haven't been on the markets in been watching, but obviously haven't made a video. Felt like there was enough movement. Again, I don't like to come on just to make a video about some price action. Pretty articulated most of, again, the trading ideas. So just for when something moves, that's when, again, I'll be doing more if I'm trading more, but not actively trading. But catching back up with CF, our current open position, along with some commentary on memory / AI / SanDisk and Micron. But it is, again, 4:03 after the market, so we are not open. Just my first thing at the front of my mind is the print, just the last trade of the day when the market's open, but then we have 24-hour trading, and then some things are trading on other things. And so do I put much credence of anything into the print, or just the last, when you look at, hey, where did this security close at? Do I see that as some indicative, meaningful thing? No, not really. Just, again, the people that really want to get in and really want to get out in the last, 5 minutes, you see some more volatility, but again, as we've documented and talked about, the sentiment kind of clears out on any one given day. And so when we open back up tomorrow, I don't see any sort of the print, the last 5 minutes, or that little fluctuation you see as meaningful in any real sense. Sometimes you'll have stocks that are trading with a lot of momentum right into the close, which that might be indicative in terms of taking a long position for a continuation, literally into the post-market or into the pre-market. But just, I don't see much insight to where something specifically closed at, when they say the word the print or the phrasing the print, just as the last trade of the day. But regardless, some commentary on CF. And so again, we traded it back here on this war agitation with Iran and Trump's going back and forth. We kind of, our thesis is we're seeing less sensitivity to, regardless of what the headlines are. That's kind of just our overall idea as to why we entered, or again, re-entered, but each time we close something out, I just take it as a new trade entirely. But point being is getting into this price action right around this 114 to 116 level, that to me was when I thought, hey, this is kind of like the maximum tension of these geopolitical relationships. And so, we're thinking any headline of, because right around this was the 114 to 116 when it's like the ceasefire, the memorandum of understanding had gone away or expired, which to me is already just kind of like a weird thing. Hey, we're gonna have rules to war. We've commented on that a bunch, but I saw it as maximum agitation, maximum antagonism, maximum disruption, and saying, hey, if this is the maximum of the geopolitical stimulus, well, then the associated price action would probably be at the top as well. And so, as you can see, we continued up from the 116 all the way up to the 130. I don't think we really traded at 130, but point being is, to our overall thesis, kind of just wrong. Seeing about the same sensitivity in terms of price action, specifically on CF, to the continued tension and relation in the Middle East. And so, but overall, still feeling pretty confident. So there's one of these days just when, from a technical standpoint of trading, this concept of a gap fill. And so this stock, CF, is not getting a bunch of volume. Every single day the spread opens up, 80 cents to $1, sometimes $2. I mean, it's a big spread. And so not on the front of anyone's watch list, or it's like, hey, we have to trade CF today. But point being is, does gap filling, because of all of the technical terminology and jargon you'll hear, gap filling seems to be a pretty consistent thing. And so point being is when you have these stocks at big spreads, we had one day, I want to say it was this one right here. Right, so here, again, these red candles, this is where it opens, this is where it closes, and then the next day it opens up here. And so we have this from 124.24 up to 124.70. And so it's just like, is it going to fill that gap, right? Just pointing out on a technical level, you get a lot of these micro gaps of just intraday or one day to the next day, or just what exactly is a gap fill. To me, it's just any sort of open market trading through a given price level. But it was something that definitely popped out at me technically, is just with these big spreads. Is it really filling a gap? What really is a gap fill? But that was kind of, again, hey, open this position around 115, kind of price average up to about 116. You can see my price average is now 120.85. The actual break even still right around 117, I believe, because what I've tried to do specifically, it's kind of, let's see if we can get another 10 day, 30 minutes. Regardless, most of the times you can see they'll open up with these wide spreads and then kind of trade down throughout the day. Open up, trade down, open up, trade down, open up, trade down. And luckily for me on this day, I was like, hey, I'm going to try to trade again just 10 to 20 shares, make 10 to 20 bucks on this fade and just try to, kind of cycle my shares and get my price average higher, while making $5 to $10 on these little, from the open to later in the day, just trying to bring my price average up, but it's not really affecting all of that much, but just trying to play with an overall short position for a couple weeks, trying to make, a couple dollars a share on these big spreads. So luckily for me, I did try to do that on the day where it just kind of went up. And so, but that's why, again, you close those 10 shares out and you lose $10, but then it brings up your price average quite a bit. But in reality, we're still right around the 117 area for break even of this trade. And so overall, again, we're kind of like maximum exposure. Again, I'm not really trading, but just anything with conviction, we're holding here. And so we've been in and out of profit right around the entry price, both today, and again, that's just what's going on over here, nothing big. But we did have continuation wanting to comment. It just seems the sensitivity is greater than I thought it would be for these ongoing tensions. And so that is why we were at 115 to 120. But again, if we're just like kind of a little more right, which there's no way to like really time this stuff, because then we have further bombings, further air raids, further strikes. And so that's when we get this further appreciation. So still confident this is appreciation. Anything above 100 is caused and stimulated by this tensions in the Middle East. And there's overall a decent trade. Like I said, if we have that 115 to 120 level, if we don't have further stimulation, because then again, 2 days ago we had this, there was some headline of Iran negotiating with Oman, or again, some announcement 2 days ago. Again, we closed at 125 one day, and then we opened up down and traded into the 118s. So we're still seeing this big depreciation on any sort of resolution headlines. Today we're talking about cutting different paths for these oils, or just to kind of like circumvent the Strait of Hormuz. Just overall, again, I see a lot more stimulus to have this price action go down. And so decent confident, decent conviction, small position, not really trading, but that's kind of our open position for now. And so would have liked to obviously have had it from the 125 to 130, and you get that initial break where you're into the profit. But as an assessment of, was this trade like, could we have done something better? No. It's just if there was no further stimulation, or if we had that some sort of break in this, again, memorandum of understanding goes kaput, and then further agitation, and then some sort of re-attempt at a resolution, or just some other headline, if that would have just happened again 3 days earlier, 4 days earlier, again, it would be in this, it was a decent trade. Like, this is a decent entry, not super happy, but we can't really predict the ongoing agitation and antagonism in the Middle East. And so that's what we're looking at CF. Again, nothing really big, just providing some commentary for the management of what we have going on over here. And so looking to, again, not super confident on the geopolitics, confident on the trade. Are we going to have right now today at 4:11 p.m.? What's the outlook for the next headline in the Iran-Trump saga? It seems pretty volatile, but again, the outward-facing things are always very much more volatile. And so overall feeling okay about this trade, but we've been in and out of the profit, just kind of floating around above or below our entry. Again, our true break-even's around 117, but just for the management, once we go into profit, looking to, again, either re-enter at a better price, or just, again, anytime we go into a profit level, just take something. That's just moving along, nothing really else to say. We have had some going over to SanDisk. Some substantial price action depreciation, again closing at 1096. And so again, we closed out at 900 minus $900. But again, we just see again these $1,000 levels would certainly be again tester starter positions if we were actively trading. And again, the hype to me on here for the long side is everyone's excited because you see again this big return where you can put a small amount of dollars and you can see a big appreciation. We're just looking for conviction. If you have a portfolio size where you can take any sort of meaningful trade, there's so much opportunity. You just need conviction, and then you scale appropriately, as we've said a bunch of times. But this is down substantially. I still don't. This isn't any sort of capitulation. There's been no day where it's just like extreme selling, no bid. So overall, we had some headlines where it's like China. This is kind of what we were expecting, right? China's coming out now. We have a headline. Hey, this exclusivity for these chip developments is not as exclusive to SanDisk and Micron. And obviously, right, anytime you have this extreme demand or the extreme profit margin, competition's going to enter. And so how long, when does that happen? Again, we were looking and projecting whenever this news cycle breaks of, hey, earnings are crushing, hey, CapEx is increasing, hey, supply constraints are into the foreseeable future. That's maximum momentum for a price appreciation. And so I would say most of the people echoing on just the guests and the people talking finance most of the day is just like, is this a capitulation? Is this the death of the memory trade? And as most people are saying, and I agree, it's just no, I don't think so. If I had to trade this right now, this would be a long position. Again, specifically to this day. And so again, whenever I make a call like this, again, I don't even like to do so without actually taking a position. But I'm the victim of super crime, so everything I'm saying is pretty what I would be executing. But if I had to trade this, which I still wouldn't be trading this, again, there's no real conviction for me. Could this go to 500? Sure. Do I expect it to go to 500 or 1,500 more likely? 1,500. And so, again, specifically emphasizing these 3-day moves, 3 days up, relief to the down, 3 days down, we're going to be looking for relief to the upside with, I think, again, this overall CapEx earnings beat. Supply might be a little disrupted with this Chinese headline, but I see this as, again, a pullback might seem appropriate. Certainly depreciation is the overall encompassing umbrella term for stocks going down or price going down on any asset. And so substantial depreciation, overall intact to me, fundamental story, and expecting, again, when we're talking about in technicals, double tops, or again, you'll hear that all of the time. I don't know if we've really talked about it that much, but the overall momentum story of, again, hey, something at the memory AI is definitely the momentum trade. Because you need volume. Like, you need people trading the securities, so the things that are the headlines are the trades. Like, you might have something that pops up crazy randomly, but the things on the headlines, things on the front of the news cycles, those are the momentum trades. And so I still think this is intact. And so I think this would be a good buying opportunity if you wanted to play this sector. This is not something I am playing, but again, tracking this trade specifically because when you have something moving $1,000 a share up or down, that's just when you have the biggest, hey, I can take a position, make a lot of money, and that's what everyone's looking at. It's like, where's the big return? Continuing to emphasize there is plenty of return everywhere, always, all of the time. You just need conviction and meaningful positioning. But I would expect, again, probably a sell-off, blow-off below 1,000 tomorrow, which we might trade. Hey, you know what? Maybe we won't say we won't trade it. But if we get a blow-off tomorrow, or again, just a 3-day continuation into the 4th day, looking to have some sort of reversal or relief, again, like that 10-17 time frame after the morning tomorrow would make a ton of sense for our 3-day blow-off into the 4th day, take a position at that extreme. Hey, our most predictable, highest conviction are these 3 to 4 day moves against a bigger medium-term trend, 3 months, 18-month type thing. 3 months, 6 month, 18-month, nothing past 3 years. And that's just, again, an empirical kind of assertion where it's, I think those are meaningful time frames for cycling, for sentiment to have any sort of trading thesis. But certainly don't think even into that like 6 month, we'll say a 6 month time frame, I would expect, even if this was to, if the top was in, and I don't really think it is, but I'm not super high conviction that it's going to go to a different high, like go to 2,400 plus, specifically to SanDisk. But will it have some sort of further appreciation? Is it more likely to go to 1,500 or 500 from here? Definitely, in my opinion, 1,500. And so we get the Barkeys. Gussie, up here. But not really too much left to say. I think the parents just went to spinning class. Again, still don't have a place to work. It destroys all of my property. There's nothing I can do. It continues just to be, it just destroys my entire life. But I really didn't have anything else to say. Wanted to provide some commentary on CF. Gussie, come up, buddy, up here. And SanDisk. So we'll go ahead and cut it here. Nothing really else. And we'll check in later. Wednesday, July 29th, 10:37 a.m. What's up, everybody? So we are back on CF. We had a couple good talking points. We are awaiting a Fed decision today. We just saw Sam Altman going to hang out with Ted Cruz or something. But some comments. So we had some more agitation or just verbiage from Trump and some further strikes out of Iran. And then the verbiage was, we're going to bomb or we're going to hit the effing shit out of them. And so, but more agitation. And so, good little point is what we pointed out in yesterday's little clip, which would have been right before this if you're watching this one, but these little like micro day gap fills, right? So this is kind of what I was referencing yesterday, but just in general, this stock, because of the spread and where it closes, it effectively a lot of times has these gaps. So it's like on a micro technical level, is like, are these things filling? Do I have expectations for these to fill? Kind of. And so that was just kind of what we referenced yesterday. We have another one of those today. Again, we're just outside of the morning trade hour that we typically articulate up until about 10:17. With the further agitation, kind of expecting it to be right around these 25 to 27 throughout the day. Further escalation will probably continue up. Hopefully not. But same type of conversation as yesterday, just articulating and emphasizing we had further agitation over the nighttime. And so, but from a technical level, we keep creating these just overnight gaps of $1 or something. So kind of expecting it to fill. Just a little technical note to keep in mind. I am watching that currently. And then as we pointed out, when we had some sort of resolution or just ceasing of some bombings, just the most minute headline of, hey, we think tensions are going away, we had a rather substantial drop-off overnight. And then, again, this, to me, what I see is kind of maximum, hey, we're bombing each other and we're saying we're going to beat the effing shit out of them. It's what else can you do? And so it's just kind of thinking this is the most extended, the price action. Like we said yesterday, this does seem to be more sensitive than I expected it to be. I didn't think we'd be much over the 120 level again. But regardless, holding this, not super excited, obviously, is going against us, but all things considered, to take a trade, you have to take some risk, and so this is all right. Not gonna, again, what kind of language we're using on any given day for the Iran-U.S. relations. It's just I see the same headlines everybody else does. But have good confidence that any step towards resolution, again, we work back towards that 100 level. And I don't really have much conviction elsewhere in the market. That will be another talking point coming up. Seagate reported earnings. Might as well just go there now. And so Seagate, again, Micron, SanDisk, and Seagate, also kind of Intel, specifically to the memory chip, again, within this umbrella of our super agenticality, of our ultra capex spend, our extreme hyperscalers, but within AI, within technology, specifically memory. And so, again, Seagate, those are all of the little hard drives that I have as a consumer. They work pretty well. Haven't had any problems, fingers crossed. But again, the most important scientific derivation video is just one backup copy. Just let it rip. Who cares? But Seagate reported earnings, and so it had an initial spike. And this kind of does happen where it doesn't. To me, very literally, somebody gets a number, numbers come across people's screens, and then the immediate reaction, right? This one went up, and then it kind of comes back down. And so it's the immediate 3 seconds or 3 minutes right after the number comes across people's screens isn't extremely indicative all of the times of, if it's going to, as we can see, we came back down. Whereas something like Snowflake or Datadog, which we've covered and traded before, it goes up, stays up, and we have the expectation for it to stay up. This one, again, just this commenting on this initial, hey, this number comes across right here on this icon, and this is the immediate reaction. Again, kind of waiting to, let's say the number comes across at 4:05 p.m. Kind of like 5 p.m. would probably be after market when I would be like looking to take a position or thinking that some amount of this price action is meaningful. Certainly not like the first 15 minutes after any sort of number comes across. But regardless, and because a lot of times, I don't know specifically, but you'll get the numbers and then you'll get a conference call. And so you'll get an initial reaction to the numbers and then more of a definitive direction from the conference call itself in terms of direct price action. And then we're right back to, again, if something beats and stays up pre-market, those are the things we're looking to short for some sort of fade of that post-market, pre-market action. But regardless, Seagate reported. We had this initial spike, effectively flat. In the context of, hey, we've definitely retraced substantially off these highs. Nothing really super specific for Seagate. We've been talking more SanDisk, so we'll pop on over here. We did have a little call yesterday. Again, if this were to wash out under $1,000, we did get that a little bit last night. I think this is one that's traded 24 hours. Yeah, this is traded 24 hours on Thinkorswim. Again, the overall market dynamics of I'm expecting, all securities that trade 24 hours, it won't matter what platform you're on. But for now, it kind of does. Same thing with like shares available to short, which that might have more staying power than just like when you can trade something. Just brokerage to brokerage. Just another thought that comes to mind. But regardless, for SanDisk, certainly huge retracement, 2,300 down to right around 1,000 as we're making this and commenting on it. Just not a conviction that we really have. Again, what does anything should trade at? Price to earnings in general. We commented on a bunch. Don't know. No opinion. Still has a lot way to go down, but I would expect it to go to 1,500 before to 500. But still just commenting, there's not been like capitulation where a definitive blowout buy to me would be is if there was some sort of extreme egregious upside when we were up here at these 2,300 levels. But through this entire time we've been tracking that since like October of last year, really haven't seen any, again, just like blowout days of extreme capitulation to the downside or extreme just blow off top to the upside. And so this is definitely substantial, meaningful retracement. I don't think the fundamental story of CapEx expanding, of blowout earnings, of these hyperscalers competing over who has the most CapEx spend, whatever the verbiage is today, I don't see that going away. So again, if we had some sort of capitulation, I would take a share long just for something to trade. But no real conviction. But I do expect it to go to 1,500 before 500. And so that's just kind of my thoughts here. I expect, again, the fundamental story, the headlines, the news cycling to stay over here. And then again, back to the point we kind of made yesterday and we've kind of made previously, is right, there's only so much in the market, right? We used to have a ton of stocks, now we have less stocks, and it's just like people get drawn to things that are moving a lot, and then you need people to be trading them for things to be moving a lot in a meaningful way where you have liquidity, you can take a position, make money, so on and so forth. But there's only so many things. And so that cyclicality of, hey, we're trading industrials, to hey, we're trading financials, to hey, we're trading retail, to hey, we're just trading consumer discretionary. Whatever the sector cycling to me is the biggest thing that can't go away because you have to be trading something. Right? Money has to go somewhere or you have to buy something. There has to be a buyer and a seller for every transaction. And for managing money, right, there's only so many things to trade. And they're being talked about because of this stuff growing, right? Forget the stock market. If you don't have real demand, you don't have a business to begin with. And so making a more explicit point that the cyclicality and the sector bias of, again, if we want to trade biopharmaceuticals, you can buy a handful of things. You want to trade energy, you can buy a handful of things. That's why indices, in a large extent, make sense to me, is because money has to go somewhere. And so it's just like one of these things where it's like, we're all in this together, certainly. I don't know if I'm making the point very well, but there's just only so many things to trade. And so I think that gives a lot of strength to cyclicality, specifically to sectors. So I expect this to come back because then again, this technical chart formation that people always talk about, the double top, it's like we haven't had a double top yet. So at the very minimum, even if 2300 or 2350 for SanDisk specifically is its price action top, I would still expect it to form a double top, right? And so that's my take here. I genuinely think pretty decent conviction on 1500 bounce. Again, is this the bottom? Again, this is not capitulation, but if this were to flood out into like 800 land, I would be interested in taking a nibble, just like literally one share. Again, just for something to trade, have some sort of conviction, and to make a decision. But that's what I'm thinking over here on the memory trade, because again, our disruption was, hey, China's coming on. We're going to have, the supply uniqueness, the supply constraint uniqueness is kind of going away. But we knew that was coming. Again, that's what we're documenting back here with all of this strength is like, people are saying it's coming, it's coming, it's coming, and then you get the headline, and then the price action follows, and it's just like, you look on Wall Street Bets, and there was a dude posting yesterday, and it's just like, dude, I bought at 2300, my portfolio's nuked, what happened? And so it's just like emphasizing that these aren't breakthrough ideas. Buy low, sell high. Everyone is more of a social creature than they are a logical creature, and the time frames of economic development and the dynamics of the market are profoundly longer than human attention spans. And so it's just like people make the same mistakes, which isn't criticism, which is understandable, but it's just emphasizing that's what happens, and it keeps happening. And so from a trading perspective, if we were in a trading mode, we would have been taking nibbles on every $1,000 price level for sure on a small starter position. But we're just, again, still don't have constitutional rights with no expectation that will ever change. So can't live a life to any quality. But that's what we're thinking over here in memory. And then explicitly emphasizing again that there hasn't been capitulation or blow off tops, upside, downside. It's just substantial, meaningful retracement. And I see the fundamental story still is completely intact or enough intact to form at least a double top in the technicals, and wouldn't surprise me to continue further. But that's we're here for now. Again, all of this stuff changes quickly. But that is what we thought with SanDisk and specifically Seagate's earnings report. And so yesterday, the Ford CFO was on. She had a little interview again in the afternoon. And it's astounding to me, the corporate speak. You can just hear them, like the things they've been echoing, this mid-level to upper level management in the business world, the vocabulary is just hilarious. We're excited about this, and this is a promising this, and this is a this. And it's just like you guys are all cutthroat hypocrites, like clamoring over each other for a career. Again, I live in the real world. Where do you guys live? And it's like, I don't want to say it's comedic, but it's just like you can feel how stark of how normal people speak and then how people are speaking in the boardroom, and then they go on a TV show or CNBC and they're just talking like they're in the boardroom, still to business professionals, still in a context of, hey, we're on CNBC, we're talking finance, but it just sounds so, I don't want to say monotonous, but just like there's no personality, there's no uniqueness to it. It's just like, I feel like I'm talking to a robot or listening to a robot. And it can be this. It was Ford CFOs yesterday, but just any CFO, anyone that's like an owner but is a high-level executive, they just have this overall vocabulary and diction where it just feels so weird to me. But that's something that's popped out, and that's what I wrote down: the Ford CFOs corporate speak. So we have the Fed rate decision, which another regular contributor to CNBC made a comment. Anastasia Amorosa says, how does setting the rate or restrict the rate limit inflation? Just to a direct mechanism of the economy. Hey, we're printing money. We set the rate of return. How does that limit inflation? Which I think is a good point, right? That doesn't limit inflation. The biggest driver of inflation is literally the ability to print money in this global economy where you have central banks that can print money, and then that central bank over there can also print money, and then you have complete self-contained quality of life within a country, right? You can have wealth in Germany. You can have wealth in the United States. Again, if you're not me. But Point being is this sequestering globally allows for people to have maximum quality of life personally. They're not really developing novel, valuable business progression personally or even like at a country level. But like, again, they're rich, they're wealthy. They can look at that guy and be like, oh, I contributed to society, whether they did so or not. And so, again, this geography sequestering of central banks is the biggest thing, where if just one person turns on their money printer, that, just nukes the entire economy of the country. Setting the rate to me is just, when I hear interest rate, the only thing I think of, not because I'm currently positioned here, because, again, I don't have constitutional rights, but it's a personal finance. Hey, if I have enough capital to make a meaningful income stream, if I'm trying to be retired, or if I'm trying to, again, not really take capital gains risk of trying to make appreciation, but I just want income. That's the thought to me of the interest rate. Is this rate high enough for it to be meaningful income on a set amount of capital? But for the overall economy, it's the actual printing of the money, not doing that in a haphazard, not immature, but just like reckless way. That's the biggest thing for inflation. The overall rate, again, what I always push back again is this the sentiment of, hey, we're lowering rates, therefore we can just expand the American economy, the bald eagles are screeching, and we're all just going to the American dream. Again, I still can't publish fundamental scientific results. So we're all over here picking like, what's going to happen next in the economy? It's probably going to be the unification of science, which has already happened, and everybody knows about that. So it's like, oh yeah, let's go pick a stock or something. But point being is, inflation is the actual printing of the money. The interest rate to me is very, I want to say, trivial overall for the overall economy. On a personal finance level, it makes sense, again, if you have enough capital to say, hey, I can make $3,000 a month. Hey, you can make $5,000 a month, whatever the dollar figure is, to, again, replace a kind of like an income stream. A job, a rental property, whatever. Because still, again, raw capital in a liquid environment is the least overhead, right? If you have a rental property, you still have upkeep, you have this. Back to what we're saying is everyone clusters into indices of the whole economy. The maximum efficiency is stock trading, because you have like even against futures trading where you have to like take delivery of product. You can literally just click buttons and then just accumulate wealth, right? And so the biggest inefficiency of the market is transportation, commuting to work, shipping goods directly, literally. And if you can make money clicking buttons on a screen, you just avoid all of that. And so, the point being is, for the interest rates, actually setting the rates, I have a very strong aversion to lowering the interest rates and then people just start roaring, yep, where the economy's expanding and growing. No. Genuine demand is, again, irrespective kind of the interest rates. If you have real demand, you are growing 100%, 200%, 300%. It doesn't matter if you have to pay 6% on your money or 7% or 12% on your money. That's real growth. And so when you don't have real growth and then you lower the interest rates to go even build a different data center, and then you created new jobs for like 16 months or like 6 months, and there was like a shit job, but you're still on CNBC saying, well, I created a job. It's not real growth. I'm not saying that AI is not real growth. I'm just saying, in this environment when you don't have real growth and then you try to quote unquote stimulate the economy with job productions, or by just lowering the rate to, again, Johnny can go borrow more money so he can expand his business. Growing demand is the only thing that expands business. And so setting an interest rate is irrelevant, irrespective to genuine demand development. And so then again, Omarosa's point of, again, it doesn't really like how does setting a rate limit the inflation. Again, I see it as trivial, frankly. It's just the psychology of, hey, Johnny now has to go pay more dollars. And a lot of times, like you see on mortgages, like, again, setting the rate is the biggest thing for like personal finance. I don't think, again, a business making 7% or 12% is not going to care, but the interest payment on a mortgage from 7 to 12% is huge. And so that's kind of just the biggest dynamic. But it was just an interesting point. Like, it was a good point again, and that's what I agree with. It's just, I don't see the overall attenuation to this interest rate where it's just this big to do every freaking 3 months, because it's this sentiment of people thinking higher interest rates means you're going against the U.S. economy, And it's just the most juvenile fucking approach to anything that I've ever seen. But obviously, again, we live in a world where hypocrites, where I've been sitting here stating, can I leave this country? My rights are violated. I cannot develop my property, which is the education for everybody. And I just got to watch other people, again, Sam Altman go in there, this company go fluctuate $300 billion of market cap in a day. And it's just like, you're taking a loan to go raise money against this venture capital firm. And it's just like, where's the real value generation? Here's education forever. Can I have some money, please? So again, you guys have failed so profoundly at every level of being a person. It's just like, I don't know, I'm just making YouTube content at my parents' house. Why not? But point being, again, we've talked this interest rate conversation ad nauseum. I don't know what else to say. It's just, again, this sentiment of higher interest rates are going against the U.S. economy, lower interest rates. Because, again, both sides are the same true thing. Where it's like, if you lower the interest rates, I don't see why that would... Again, if somebody can make money or not make money, 1 or 2% is not affecting that decision in any universe. And then we just put this, hey, we lower the interest rate, we raise the interest rate. Again, I've said all I could say on that point. I think I've been clear. Again, of available logic, of things you can say, I do not hear any meaningful conversation outside. But I don't think a high interest rate kills the economy. I don't think a low interest rate stimulates the economy. Yeah, people are, if you give out a loan, you're going to want something back in return. And I feel like a central government, if you're holding the bond, should give, again, I said you should have, to me, it makes sense to have kind of a strong interest rate environment for regardless of who's issuing the debt, whether that's private equity, whether that's a Fannie Mae Mac loan for your mortgage. It's just, if you give out money, you're going to want something back in return. So it's like there's always going to be a rate of return. That makes clear, fundamental, empirical sense. What should that rate be if it is a federal government giving a loan to a much smaller party, whether that's a business or just a single individual? It's like you should. I think a strong interest rate, again, to these levels, I don't know what we're at, 3.75%. Again, I have no empirical reason to say it should be one thing or another. Again, just on a personal finance level, if you have enough money or if you're on fixed income, meaning fixed income from treasury bonds or some municipality bonds or whatever, you're going to want a little higher. But it's just like, what's the fundamental economic reason for any rate? It's going to be a something. What is that something going to be? It sure, and then that's when you get it needs to keep up with the nominal rate of inflation or whatever the real inflation rate. Hey, this thing cost X amount of dollars last year, so the interest we're paying out has to be equate to that, what they call, again, true zero or real. There's a term for it. But that's kind of like the whole conversation of what the rate situation is. And so we're doing that again today. And then the overall consensus is a vast majority of people expecting it to hold. Again, I think it's at the 3.75 or 3.5, something right around there. And then a slight chance of a hike today. No one's really expecting it. And then the market's pricing in a hike in September. And so it's just like, sure, again, there's definitely going to be inflation. It's definitely going to be a substantial point. We're between nominal and substantial, meaningful and inconsequential. Setting the rate, again, it does limit inflation from the actual dollar figures. To me, that's the nominal part. But the actual psychology of, hey, you shouldn't just take out more money just because is very true. So that means to raise rates. That's a kind of like a good, like, hey, do you really need money? If you have real growth, whether it's 4%, 5%, or 3% is not going to affect growth at 50%, 100%, 200%. Couldn't even be a thought. And then I really, really don't like we're going to lower rates and then it's just going to stimulate the economy. That's wrong. That's not true. Not morally wrong, just objectively, economically not valid. And so, again, we say the same shit about the rates every 3 months. And so, yeah, but that's what I have written down for today. Popping back over onto our trades. Let's see where CF is at. Nice. So again, we're just kind of floating around here, not feeling super great, not super worried either. But it's just if we kind of get lucky and we take the same trading perspectives, just when it was on the 25 to or 125 to 130, we'd be sitting pretty good. But again, this is what I have conviction on for the small amount of market stuff I'm doing. So we'll just hold it. Hopefully we don't explode up to the high side. I do put pretty hard, if I'm not sitting here, a stop loss, just, at anything that would be like a blowout, like 140 plus, just to avoid if I leave my computer and who knows what happens, something happens. I typically do have that for all trades, just again, real blowout level stop losses. If not, if I'm even like looking at my terminal once or twice or 3 times a day, it's active management. But again, the people on CNBC continue to not impress just with their overall understanding of market dynamics. One other thing, I guess, was just the QQI, because again, we had the one day where we bought it. It made sense on price action level. I think it was whenever the dividend was, it was like right here, and then we popped up the next day. Should have put a stop loss, didn't. Again, don't feel like these aren't positions where I'm like worried about. Because again, my exposure to tech is through these income funds, the NASDAQ 100 income fund. But point being is it's just the overall capital appreciation. Again, if we buy right here and then we pop back up to where we're at, then we're up $361. So we got the dividend and we had capital appreciation. And so that would have been like a plus 220, 250. Didn't put a stop loss because, hey, again, if this war resolves, we have these strong earnings reports into the fall. It's like I'm expecting this to begin. If we look at the level we're at, our price average, 53.87. So we're like right around here, and we will lower this a little bit. But like then we just look at the history of like for how long has this traded above this level. And that's kind of just how I've been doing this fund, where it's just like, hey, before we were in it or into it, back into September, I think we didn't buy into this and kind of into like the winter time frame. But again, we're at a level where it's been trading, at the NASDAQ 100 levels of the past year. It's like okay on the price entry. But again, it's just like I put a stop loss up here. You secure that 220 again on a perfect trade. But just for something like this, again, it's just I don't see a way to meaningfully trade that type of movement. But again, trying to any commentary I can think of. And so we'll add more here. Again, I like this fund, but just commenting on the overall price action, the capital appreciation is more consequential than the actual dividend, even on an income fund. And so it would have been nice to, been buying this here. Again, if we didn't have CF, we didn't have exposure already, we would just be buying more of this for an actual, again, like day trade, swing trade type of deal. And so that's where we're finishing up today right now. Nothing else really coming to mind. Joby, oh my goodness, I can't take Liz Young on a plane ride now. Look at this. Yeah, Joby's really going into the toilet. Get nothing new here. I'm gonna hold this one. Again, I like the fundamentals. Executive helicopter ride, sure, but again, truly on a trading level, expecting the news cycle to this sector, to this company, again, I don't think it's gone away, but to like come back in a meaningful way. And so again, there's only so many sector things to trade. So the cyclicality of the sectors is really like the biggest emphasis in the overall. Hey, let's make the most meaningful trade to me. And I think it's apparent by the market dynamics. But regardless, because it was, what was it? Scott Wapner called Liz Taylor, Liz Tyler. And I was like, hey, Scott, don't mispronounce my girlfriend's husband's last name. So I just wanted to be very clear on that. But that is what I have for now. Nothing really else popping up. DFTX, that one's holding, regardless of like the market conditions. This is sector specific where it's going to flag, hopefully, or expected to be between 40 and 45 until the next fundamental development on the trial. And so this has been getting some decent headlines, certainly like the biotech in general, and that will come up on their little sector sheet on CNBC. But just the science is there. Again, the policy, the discontinuity of the policy and the science here is just tremendous. As always, again, we continue to emphasize lying about science causes the most death and destruction across the globe that you could do, which is what everybody's doing, and we just keep going. Another day comes by and just no one cares. But that is what I have for right now. We'll close out. Where's CF at? And so this is what we'll be following, and we will check in later.